Hello ladies and gentlemen, this is Nathan from MyCryptoParadise, and today we will be analyzing Harmony, the coin with the abbreviation of 1 against the dollar and the Bitcoin. We will look at the price action over multiple time frames. So what is going to happen? The Bitcoin has crashed, most altcoin has crashed, and there is still that unclarity whether this strong downside move will continue or in fact we have reached the bottom. And in this video we will look at the scenarios for the 1 against the dollar, whether we can expect this move to the upside towards the new all-time high, and if this an ABC corrective pattern, in fact we might be having a continuation of this downside move towards this key support, a previously formed demand area. And if we change this chart to the logarithmic, we will be able to see that this is an average price uptrend trend line. So clearly there is strong support, which might be the case, but at the same time look at this double bottom formation, extremely strong demand area for the 1 against the dollar. So is it an ABC with a corrective move down, or in fact this has been a double bottom which will result in the heavy growth once again? We will dive into that in just a moment, so stay tuned. But before that, let's look at the overall market sentiment, then we will jump to the Harmony website, look at the previously made analysis, and we'll start with 1 USD and 1 BTC analysis. On the coin market cap, we can see Harmony is ranked at 77, pretty high spot, with the recent 7-day move of 15% up. Well, this is because the price has recovered heavily, and on this chart we can see that it is in fact in green compared to most of the coins, so there is interest in this coin for the time being. So rank 77, overall market cap $1.2 billion, and let's jump to the website of the Harmony. So this is a scaling Ethereum applications and cross-chain finance. You can see the comparison table to some of the competitors, and it seems that they're best in many aspects, which is yet again something that might attract investors. Moving to the coin 360, we can see that price has been recovering during the past 24 hours after the collapse by 40 and even more % across the board. Is this an opportunity to buy long term or not? And before we jump to the 1 analysis, let's quickly jump into the previously made analysis, which was for the Decentraland. We spoke about this resistance, that it must be taken out in order for the buyers to step in. It has been respected, and what we can see, price did break to the downside. We expected the support at 136 to be tested, which is the previous supply demand area, and as we can see here on this chart, which is the Binance spot, we did not test this level. But if we move to the Binance futures, guys, we can see that this level got tested precisely. We can see 0.3619, and if we move to the other chart, 0.3619. So this was the bounce, and this might be suggesting that the bottom for the cryptocurrency market has been tested. But of course this cannot be the case for all the coins, but for some, most certainly this is likely to be the case. So let's move on to the 1 against the US dollar on the weekly chart. This is the logarithmic chart where we have applied a simple ascending channel, and then we extended it channel after we had this break and close to the upside. And what is very important is the bounce of the top of the channel, which actually shows that the selling pressure is high. After this bounce, price did correct down to test 21 exponential moving average. So the moving average got rejected already twice. Obviously we need to see this weekly candle closing price to see and confirm this bounce. But we already had it previously when the price tested 7 cents. So what we should be paying attention is obviously this supply demand area, the same as we had on the Decentraland. You can see that here, and price did go down and tested it. So perhaps we can expect the same price action, obviously only if we have the break below the support. Now, speaking of the support, what we have is the 61.8% FIPS at 9 cents. Now this FIPS has been applied to the last wave up, and we can see that the price did pull back and 61.8 FIPS got rejected. Price failed to close below. In fact, the closing price on the weekly chart has been right at this level. And as long as we have weekly close above this support, this will remain a bullish market. Now, what happens if there will be break and close below the support and the moving average perhaps this week, which is possible if the market will continue to crash? In that case, we are likely to test the nearest supply demand area located at 4 cents, and then price, if breaks that support, will most probably drop even further. On the other hand, considering that the support has been respected, there is a probability to retest the top of the channel, which can send price up by 150%, as you can see on this graph. Let's move on to the 1 USD on the daily time frame. There are also some very important aspects. First off, we have used these fibs where you can see this bounce of the Fibonacci with the closing price right at this support. At the same time, we have a clean bounce of this daily candle of the same support at 0.09. We had the break above the downtrend trend line, which also favors that the bulls remain in control. As long as we hold this support, especially the weekly and the daily closing prices above this level, this will remain a bullish market. And to this move up, not only we apply the Fibonacci retracement indicator, but also a Fibonacci cycle indicator, which you can find right there. There are a lot of Fibonacci indicators. So we have used the Fibonacci time zone, which shows us that one of the cycles, cycle number 2, has been right there, and this actually was the bottom and where the price bounced off the support. Now the next cycle starts tomorrow. Whether this is the bottom or not, yet to be seen. On lower time frames, we will look into that, but for now this could be the very bottom for the won against the dollar. Unless we have this break and close below, then obviously the sellers can push easily price towards this 0.04. Moving on to the 4-hour time frame. Here we can see the break above the descending channel, which yet again suggesting that the trend might be reversing to the upside, but we have been stuck in this wedge where the price is failing to break above the resistance and it's failing to break the support. But we can see that there is a double bottom, clearly a strong demand area at 0.07. There was a lot of buying pressure at this level, after which price returned back to the previously made support, which obviously became the resistance. And this resistance is being respected, as we can see price failing to break and close to the upside. Besides, we are respecting the 50 exponential moving average. If we zoom it in, we can see that there was a very clean bounce of the moving average. And right now we're having the support and resistance. Straight away we can spot them where the price is likely to range, unless there will be either break below the support or break above the resistance. In order to confirm the break above the resistance, we need to break above this high produced today at 14 cents. Only then there will be some buying pressure. It can be small, but there most likely will be buying pressure rather than the selling. So this is a waiting time whether the price will have a breakout with a daily break and close above the 14 cents, or there will be break and close below 9 cents, because this is a 78.6% fibs based on this overall move to the upside. And as we can see, there was a clean bounce of this support, and previously we had another bounce of this level. So this is a minor demand zone, and as long as it holds, we can expect break to the upside. So break higher will send the price towards this resistance trend line, but if price will start moving down and breaks below this low, we are likely to test this support at 7 cents once again, and this will look like a triple bottom. But just look this increasing volatility throughout the past week. This will result in a heavy price action, in even more volatility upon the breakout of the wedge. So it's still a waiting time whether the breakout occurred to the downside or to the upside. Finally, let's have a look at the 1 hour chart, where we can see clearly the support at 1 cent and the resistance at 18 cents. These are clearly visible levels and traders must pay attention to them. Now what we have also is this level at 13 cents. There were multiple bounces of this level as we can see, and today we are bouncing off this resistance. Previously it was a resistance, then demand, 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 resistance, yet again resistance. Unless we have this breakout, the selling pressure will dominate, potentially resulting in retesting the 0.1 psychological level. It could be playing that key role in further price development. So watch the resistance for the breakout and the support for either the bounce or the break lower. The huge drop in price across the board is providing a great opportunity, buying opportunity for the long run, but you must pay attention to the volatility because market can move 20-30% in the matter of hours. So this is something to consider when you trading any cryptocurrency. Finally, moving on to the harmony against the Bitcoin. On this chart we have applied an Elliott wave theory. The overall trend is obviously bullish. Since the beginning of May, there was this ABC corrective pattern which has been completed because we had the break and close above the B wave. And based on the Elliott wave theory, we can be about to start the fifth wave to the upside. Besides, we can see the bounce of the moving average, we can see the bounce of the trend line. But if we zoom it in, price did not test the trend line yet, and this could be the case. Price can retest, can move down to retest the trend line and potentially test the 50% FIBs, which is a very strong support. Previously, we had the bounce of this support, very clean rejection, then price failed to break and close below this level, and yet again we had another bounce of the 50% Fibonacci support. A very strong demand area for the harmony at 212 satoshis. But we also must consider when analyzing by Elliott wave theory, because we could have had 1, 2, 3, 4 and 5th wave to the upside. And in that case, we will have an A, B and C corrective move down, where the 212 satoshis level will be tested once again. But as long as the daily closing price remains above this low, this will remain a bullish market because we had a daily close above the previously made high, which is a bullish market because we are still producing higher highs and higher lows. We had a break above the B wave. Daily break and close below this low will invite more sellers, and in that case price will be dropping further. How far? Good question. The key support obviously is the previous resistance area near 78 satoshis. This scenario must be considered also because there can be still range trading going on and then potentially a huge drop, yet another huge drop for the harmony against the Bitcoin. All in all, this is the waiting time. Buyers will be waiting for this breakout to the upside. Sellers will be waiting for this break below the recently produced low at 7 cents. That was all for today, ladies and gentlemen. Don't forget to take it easy and smooth, and see you next time.